welcome to the stock market analysis. Today let's continue to look at the S&P 500. My audio might not be so clear or good because my Yeti microphone, the cable is a bit spoiled, so I'm using I think another mic. So yesterday we have a very nasty rate bar here, and I said that based on my analysis, I do not kind of like the way that the S&P is doing. And we have seen pockets of weaknesses, especially in the Dow and in the Nasdaq. And here we have the S&P breaking below the rising 50 MA, and that is something which is not good. Now, the last time it breaks below the 50 MA, you can see the damaging results. So far from here to here, it has not broken below the 50 MA, but yesterday it did. And the reason the market is not falling that much is because we have an area of support around here. So support that exists does not give up that easily, but if day or two the support does not hold, there is a possibility that this support may be broken and we might go lower. So if you take a look at the 16-minute chart, things are still not very good. It's below the declining 200 MA, something which is not encouraging, something that is not good. And let me go to the 2-hour for you to see. Always try and draw a trend line, and if the market does not go above a trend line, well, it's probably going to bounce up and go down, bounce up and go down. So it's not a very convincing rally, even if it goes up here or here, because if it does not want to break a downtrend line, you should be suspect of the rally. It may continue to go lower. Even in the 2-hour chart here, we can see the 20 MA declining, 50 MA declining, 200 MA declining, and we have the faster moving average below the slower moving average, 200 above the 50, 50 above the 20, and this is a picture of bearishness. Okay, and for nearby resistance area is around here. Let me just draw the resistance for you. This is the pivot low. If it's not able to go above this resistance, okay, there's a possibility of more sell-off into the future. Let's take a look at the DIA. DIA is well, I think it gap up a bit today, but you can see that the daily 50 MA and 20 MA is curving down. Soon we might have a bearish cross. This is the bullish cross and the market rise. If you have a bearish cross and this support area does not hold, I don't think the market in the Dow might not collapse in a day or two, because there's strong support here. But as the day goes by, if it cannot bounce back up, we might see this support eroded and it might go to the 200 MA. If you look at the 2-hour chart, well, we can still draw this downtrend line, and if we want to see that support holds and it slowly goes back above the downtrend line, then there is a possibility of a nice rise back again. So at this moment, let me just go to the hourly chart. You can see it's below the 20 MA, 50 MA and 200 MA. Try not to buy stocks or this component as long as it's above the 20 MA and below the downtrend line. We really want to see a bottoming happen, then it goes back about the 20 MA and 50 MA, but before that, stay cautious, stay bearish. And the Qs, well, it's going up a bit today, but yesterday it had a very nasty rate bar. You can see the breakdown here. Yesterday I mentioned in Qs, if it breaks this downtrend line, it's going to go lower. Usually when the market breaks below a downtrend, this uptrend line in the Qs, there's going to be a very nasty sell-off. So today we have a bounce up. Okay, if it cannot go above this uptrend line, it may just go up and sell off in later. So I do not like the declining 20 MA and 50 MA and 200 MA. You always want to see the stock going back above the 20 MA before doing anything. So let's take a look at the semis. Yesterday, SMH, we have a nasty sell-off here, but as it reaches the 50 MA, we might see support, and sometimes the stock can, the sector, if it hits the 50 MA, it might just bounce back up. Okay, so now the 50 MA is still holding, is still nearing, so if it drops to 50 MA, we might see a bounce up. All right, but if it goes below the 50 MA, you have to be really careful with especially semi stocks. Now XLK, wow, nasty sell off yesterday. It's below the 20 MA, 50 MA. Soon we might have a bearish cross. We have a bullish cross here where the 20 MA goes above the 50 MA and a nice rise. And whenever there's a bearish cross happen, you have to be very, very careful. So tech sectors has already broken down below this consolidation, this support area, and if it goes up here but it cannot go above this resistance area, there might be another sell-off in the future, because we can see the 20 MA declining, 50 MA declining. We have a bearish cross here, and the 200 MA is also slanting down a bit, so this might be a bit dangerous for tech sectors. If it cannot go above this resistance, well, maybe it hits here and goes back down, then it might sell off down to this area of 197. So you have to be very careful at this moment. Usually when there is a negative rate bar, you have to be a bit careful because it might drop to this area. But is this the end of the bull market in the S&P 500? Definitely no, because if you look at the weekly charts, you can see that we are in a very strong weekly uptrend. Higher lows, higher lows, higher lows, higher lows, and higher highs. So unless the stock market, this is the SPY, unless it drops below this area, previous high support, even if it corrects down to here, I'm not very worried about it, because this is an excellent area for you to buy. And maybe if you take a Fibonacci retracement from here to the movement here to here, if it drops to this area, it's only 38% drop, which is an excellent area for you to buy, right? Even if it drops to 50, it doesn't really matter, but I don't think that this support area, this green support area, is going to be eroded that easily. But correction do come, and the correction, if it drops to the 20 MA, you might want to see if there is a bullish weekly reversal in the SPY as it drops to the 20 MA. But you can see 20 MA is rising, 50 MA rising, 200 MA in the weekly chart is rising. So this tells us that we should be continue long-term bullish in the stock market. They have strong support here and here. So this is what we call short-term weaknesses in long-term strength. And the trick here is, when there's long-term strength, you want to wait for the correction down to an area of value, and then you start buying it. Okay, so let me go and look at some other sectors. Basic materials not doing very well after it drops below the 20 MA. It's now sitting at the 50 MA. The angle of the drop makes me not very confident of the 50 MA giving us a nice bounce up yet. Let's go to the weekly chart. Okay, now weekly chart does tell us that, hey, don't worry too much about the correction. If it corrects, this area is an area of support. We want to see for it to stabilize, and then maybe we have another round of rally up. It might drop to this area, I don't know, but at this moment it's still in a bearish 60-minute momentum. And you want to at least wait for it to go back above the 20 MA and the 50 MA before, and maybe it stabilizes, and you see we can look for a basing and then the start of stage 2 new uptrend in the 60-minute chart. And okay, let's look at gold prices. Gold futures still going up despite a topping tail. I wasn't really very bearish on gold despite the topping tail, because you have to look at things at trend. look at the rising 20 MA, rising 50 MA, and rising 200 MA. If you can see, you have to stay bullish when the trend is up. Okay, only if it starts to crack below the 20 MA, then you worried about it. So right now it's still trading above the 60-minute 200 MA. Stay bullish on gold short term. And let's go to oil. Crude oil is, well, we have a bottoming tail yesterday, and today kind of like doji indecision and stuff. But eventually, if this 20 MA holds, you're gonna see kind of like a flag pattern, and if it breaks out higher, we'll see the oil prices going up again. Okay, so it is bullish, in a bullish uptrend, unless it really drops below all this level, right? Then we have a new bearish trend, but daily uptrend is still all right because there's resistance over here, and here it needs time to absorb it. So at this moment we are still bullish in oil, and if it breaks out, you can probably see it going higher. You can take the measured move here, measured move, okay, and project it higher to get a target if it breaks out. Okay, so I do hope that this analysis has been helpful to you. Do come back tomorrow because I'll try and do market analysis every day, and I'll see you in the next one.